In this presentation, we will discuss comprehensive planning, integrative planning solutions, and the written comprehensive plan. By the end of this lesson, you should be able to describe the process of integrated planning and explain the components and purpose of a comprehensive financial plan. During this course, you studied cash and debt management and planning for education funding in detail. In your other financial planning courses, you'll delve into risk management and insurance planning, income tax planning, investment management, retirement planning, employee benefits, estate planning, and business planning. Together, these pieces form the core content of the comprehensive financial plan. In offering comprehensive planning, you'll be moving the pieces of the financial planning puzzle in combination. Your decisions in one area will impact others, particularly when it comes to proactively managing the cash flows. That is what is meant by integrative planning. You have to consider the overall combination of planning priorities and cash flow constraints in making your recommendations. Once you have conducted your integrative planning and synthesized planning recommendations, you will present that information to the client in oral and written form. Last week, you learned about the face-to-face presentation. You learned about communication techniques that will help you effectively communicate your message. This week, let's look at the written comprehensive plan. Typical components of a written plan include the cover letter, the engagement letter, tables of content, introduction, executive summary, the client's goals, their circumstances, and the assumptions that you're using in the plan. Content discussion in each of the core planning areas. An action plan, a conclusion and disclaimer, and the supporting appendices. The comprehensive plan needs to frame the client's situation and circumstances. It needs to echo the client's story. You do this by listing the client's specified prioritized goals, framing the client's personal information, including the family data, the goals, the needs and objectives, risk tolerances, constraints and preferences, and time horizons, and creating personal financial statements, the statement of net worth, and the statement of cash flows. Remember, the client needs to hear their story all the way through the written plan. The executive summary is a concise presentation of specific actionable recommendations that are recommended in order for the client to reach his or her goals. An example of an executive summary is shown here. Risk management. Purchase a $1.2 million term policy so that your family needs are provided in the event of early passing. And increase your umbrella liability coverage from $1 to $2 million to protect your estate's worth. Educational funding. Open a 529 savings plan account with Jacqueline as the beneficiary. Fund the plan with an initial lump sum of $20,000 and then contribute $3,900 annually. Within the comprehensive plan, each of the core content areas that are part of the scope of the engagement is analyzed. The format and style of the sections are up to you, although the sections should stand on their own. A client wants to understand his or her situation and your recommendations and the logic by reading the section. How you write the core content narrative is certainly up to you. However, the process depicted on this slide is well worth considering. As you would expect, the sections begin with some sort of an introduction. Framing the core planning area within the context of the client's wants, needs, and goals is effective, and it promotes genuine interest. As planners, we often spend time educating our clients. So you might find it effective to provide an overview as part of the introduction. For example, the investment section of the plan might begin by describing the concepts of risk and return, time value of money, and asset allocation. That would then flow into a description of your client's current situation, the investment planning alternatives you've considered, and your suggested recommendations. Any disclosures, such as the uncertainty of investment return or recommendations are based on client-provided data, might be mentioned at the end of the section. In the cash and debt management analysis, you will be reviewing current and projected cash flows, funding future purchases, and debt reduction and consolidation strategies. The risk management and insurance analysis will include a review of the current risk exposures and policies, needs analysis, and suggested adjustments to the current policy coverages. Your income tax planning analysis will include an analysis of the most recent tax return and suggested strategies for income tax reduction. Investment planning analysis includes an assessment of the current investment portfolios, recommended adjustment to portfolio allocations, and recommended changes to security holdings. In assessing college funding, you'll present a capital need analysis and offer recommendations for funding those needs. Retirement planning analysis includes a retirement needs analysis, an annual contribution schedule, and withdrawal projections. Estate planning analysis generally includes a review and analysis of important estate planning documents, property titling, beneficiary designations, and suggested estate planning strategies that can be used to achieve the client's goals. If the client is a business owner, then you might be expected to offer an analysis of current risk exposure and policies, identified current and projected cash flows. Provide retirement planning opportunities, for example, adopting a qualified plan, and address business transfer issues such as a buy-sell agreement. Numerous studies have shown that the most successful people have clearly defined goals, and they put those goals into writing. The to-do action list is an important element of the written plan because it gives power to the implementation phase. It clearly defines who does what by when. For example, the table on the slide depicts 3 prioritized client goals. First, meet with the mortgage officer to refinance your mortgage. You, the client, and the bank representative will be engaged, and your target date for completion is September 1st. Number 2, purchase a $100,000 term life policy. You, the client, will meet with your insurance agent, and the due date for this is September 30th. Update the will. This involves the client and the attorney. The due date, October 20th. The written plan will be more effective in motivating client action when it clearly communicates the client's story. The plan offers specific recommendations that are linked to the client's goals. The content promotes a clear understanding. The writing is in a positive and supportive tone. And it offers a clear implementation schedule. Planning software is a powerful tool to support your work. However, it's not a black box solution. In using the software, you will input data, including personal and financial assets, consumer debt and mortgage data, cash flow details, and goals. Because outcomes are only as good as the input. Having input the client's unique data, you'll be able to work with the software. 2 benefits of using planning software immediately come to mind. First, The software calculates scenario results very quickly, and it provides you with an immediate answer to the client's question, can we fund those recommendations? It's easy to vary the assumptions and rerun the software to see the impact. Second, the software creates a consistent presentation output. The plan layout, including tables and charts, can be quickly generated, and they're consistent. The plan layout can include tables and charts. Narrative. Supplemental data. Note that it is recommended that you customize the software output for your client, and whenever possible, try to incorporate your voice into the narrative, perhaps in the introduction section. In this lesson, you are introduced to the subjects of the integrative comprehensive plan and the written financial plan.